Hi guys, welcome back to another video from Father and Son Investing. We're going to do a Teladoc update today. These are the things I want to touch on. They did their earnings call earlier this week. We're going to cover some of those results. I'm not going to go over them extensively because you can listen to the call yourself if you like, or look at some of the slides that they've created. Next, we're going to talk about what the outlook is for Teladoc, particularly for this year. We're going to talk about two ways that they are going to use to increase revenue. They will be revenue drivers for them for 2022. We're going to talk about the utilization rate that they're also trying to increase and how that will change their total addressable market. And then lastly, I want to talk about their price to sales. Is this a good time to be buying Teladoc? So we'll take a look at what that's doing right now as well as what it has been in the past. All right, let's just get to it. $554 million in revenue. That is a 45% year-over-year increase. Now, they also beat what analysts were estimating. They were saying in the range of $547 million. And you know what else they also did really well on was the earnings per share loss. It was only 7 cents per share. That is amazingly close to becoming profitable, at least for the fourth quarter of 2021. Analysts were expecting something in the range of 54 cents per share loss. Now, even though they aren't yet profitable, they are generating free cash flow of $194 million for all of 2021. This slide just shows graphically how they're doing fourth quarter to fourth quarter year over year, a 45% increase in revenue. Now, here's a slide that really tells a lot. The access fee revenue up 51% year over year. Why does that say so much? Because the increase in the number of members wasn't that much. In fact, that's been one of the complaints for Teladoc, is that their membership growth is only growing in the 1 to 5% range each year. So to get 51% year over year revenue from such little growth in the membership says a lot about what the company is doing, and we're going to touch on some of that. Now, here's exactly what I was talking about in terms of the U.S. paid membership. Fourth quarter of 2020, it was 50.3 million. And then we look at fourth quarter 2021, and it's 53.6 million. So it did go up a bit, but not the kind of growth that we would like to see for a company that is growing so rapidly. Nevertheless, despite the paucity of increased membership in the United States, they are driving up the average revenue per member within the United States. Look at this. In the fourth quarter of 2020, it was $1.63, and in the fourth quarter of 2021, $2.49. All right, let's move on to the next topic, the outlook. Let's just look at their 2022 guidance. We're going to see 25 to 30% growth year over year in their revenue, and we're going to see 23 to 33% in the EBITDA. Now, in the first quarter, that EBITDA is going to be negative, and why is that? Well, they tell us down here in this footnote that really it's going to be attributable to Livongo devices and some accounting adjustments related to the merger. And they also say that if they weren't dealing with that they would have an EBITDA growth of about 3 to 11% for the quarter and 35 to 45% for the year. Now, I want to shift gears and talk about two revenue drivers that really are going to increase that revenue that they're getting per member per month. So let's talk about the first one. We see down here an announcement saying Teladoc Health reimagines primary care with Primary 360. Now, some important facts in here. When it comes to primary care in the United States, 1 out of 3 people do not have a primary care provider. And among those who do have a primary care provider, 4 out of 5 of them really don't have a very consistent relationship with that primary care provider. What does that mean? That means that there is a significant opportunity here for Teladoc to make inroads into primary care. Now, Teladoc was already emerging as a market player in the telehealth industry even before the pandemic hit in 2020. That pandemic really was a big tailwind for Teladoc. Looking here at this slide, 80% of employers believe virtual care will have a significant impact on how care is delivered in the future, and 99% of employers intend to maintain or increase their level of investment in virtual care in the coming year. So this is something that employers see as a valuable aspect when it comes to providing health care for their employees. Teladoc is coming at this by trying to meet those employers where they're at. So some may just be in the discovery stage, while others are fully embedding their telehealth opportunities. Essentially, what they're looking to do is to become a primary care clinic for people, their primary care person, using a dedicated team. I mean, we're talking about a primary care provider, we're talking about nurses and medical assistants, and in cases where in-person things need to happen, they will have some partners working with them that can come to a patient's home, or the patient can go to a clinic, such as one that exists in a grocery store, to get certain things done in order to integrate everything that a provider would need to take care of a patient as their primary care provider. All right, what does that look like then when it comes to total addressable market? Well, right now, just kind of doing the Teladoc, what their current business model is, we're looking at about 20 billion. When they expand that out into primary care, we're looking at about 160 billion. Now, the total U.S. primary care market is about 250 billion. So you can see how they have the opportunity to cut into that market significantly by this offering of primary care. The second thing that I think is going to help with their revenue is going to be what they're calling Chronic Care Complete. That was just announced on February 17th. Essentially, this is going to combine some of Livongo's features. Remember, Teladoc merged with Livongo not too long ago. And it's going to integrate the physician component now with all of that data that Livongo is generating when it comes to taking care of chronic conditions. Now, why might that be a big revenue driver? Well, currently more than 1 in 3 adults live with multiple chronic conditions, with those conditions comprising 90% of all healthcare spending. This is where the money gets spent in the United States, chronic conditions, 90%. And so Livongo and Teladoc merging together here is going to create opportunities for Teladoc to drive their revenue up among their existing members that they already have. Now, this slide here shows how that's going to drive revenue for them. We're just looking at a single condition. We're going to see that per participant per month, they're going to get $70. When they start dealing with multiple chronic conditions, per participant per month, they drive that revenue up to $95. Now, that's going to lead me to the next point that I wanted to address, and that has to do with their total addressable market, how these two revenue drivers, these are just two of them, there are some other ones that they have as well, but how these two initiatives here are going to drive revenue and utilization. So let's just look here. Right now, they're saying that they have 76 million lives that they are caring for. Now, that includes the membership plus the people who are just paying per visit, per fee. I've done one of those visits in the past. It was actually very convenient. Now, if we look down here, we'll see that it says 63 million. Now, just what is those 63 million lives? That is the potential new populations within the existing clients. That means companies that they already have relationships with that don't have some of their employees covered. So we see that here when it comes to multiple levers for growth. We're talking about covered life penetration with the clients that they have. And then that other lever trying to be increasing the product penetration, covering more and more per patient. And that is going to be their mission for this year. When we look here, we see that the primary 360 initiative that they started last year only has less than 1% penetration so far. Most of the people are still in the legacy telemedicine era. Now, just to reiterate, the way that they're going to drive that expected compound annual growth rate of 25 to 30% is by increasing more revenue per member. We're looking at about 25% per year, and then they're going to continue that still anemic looking 1 to 5% per year growth in the members that they have. All right, I just want to wrap up this discussion now by talking about Teladoc, their share price, and in relation to their sales. So we're going to call it the price to sales ratio. Now, at $69 per share, of course, it went up $7 today, 12%. So it did take a big jump in the price to sales ratio today, but we can see how it has been falling since July of 2020 when it was clear up at 24.5 in the price to sales. Now we're going to come down here to just yesterday. If you'd managed to buy it yesterday, you would have been getting it at a tremendous bargain on the price to sales, less than $5. Now we're going to jump down here to the past 5 years and look at some of the averages, as well as the minimums and maximums. Yesterday, 4.921, that would have been the minimum price to sales over the last 5 years. Of course, maximum 25.64 way back in August of 2020. But the average has been 12.2, and the median has been 10.8. So when we're looking at Teladoc in terms of its price to sales ratio, this really is, at a just about all-time bargain here. All right, that's going to complete our discussion on the Teladoc update today. Do I think it's still worth buying? I do. In fact, I've been holding my Teladoc shares. I'm way down on Teladoc now. But after reviewing their fourth quarter results and looking at the history here in price to sales and these two new initiatives that I talked about, yeah, I'm a buyer of Teladoc again. I would like to see it come back down. I would love to get it back down to where it was before it took that big jump today, just because you can buy more. And I certainly think when things are volatile like they are right now, we can expect to see perhaps that Teladoc share price take a little bit more of a dip. But even at its current price, still a great bargain. Please share with me any thoughts that you have about this video or questions you have about Teladoc. Share this information with a young person in your life. Get them involved in investing and make investing a family affair. And until next time, enjoy your investing.